Okay, so let's get right into it. The rule book for your PAN card. You know, that little 10-digit number that kind of steers your biggest financial moves? Well, it's about to get a major rewrite. Starting in 2026, the government is loosening some rules while, you guessed it, tightening others. So the big question we're tackling here is, are these changes a real break for us, or are they just a smarter kind of tax trap?
You know that feeling, right? You're about to finally close on your first home or maybe drive that brand new car off the lot. The paperwork is out, you're buzzing with excitement, and then, boom, everything just grinds to a halt. All that energy, all that joy, just gone. And all you're left with is frustration.
Well, for years, that sinking feeling is often boiled down to one thing: PAN card paperwork. These strict limits and what feels like endless forms have been a major bottleneck for some of life's biggest purchases. It's this hidden but very real headache for millions of people.
But you'll want to mark your calendars because on April 1st, 2026, the whole game changes. New draft income tax rules are set to kick in, and they're promising a totally new era for our financial lives. But is this all about making things easier for us? Or is it about making the tax department's job easier? Let's break it all down.
All right, let's kick things off with the good news, because there are some genuinely welcome changes in here. The new rules are really designed to clear out a lot of that annoying paperwork for several common big-ticket transactions. This is where you're going to feel some immediate relief.
So the first big win is for anyone out there buying property. As it stands now, any property deal of 10 lakh rupees or more means you have to quote your PAN. Well, under the new proposal, that threshold gets doubled.
That's right, the new limit is a full 20 lakh rupees. This is a huge relief, especially if you're a first-time homebuyer in a Tier 2 or Tier 3 city. It's a total game changer that just simplifies the process for a massive chunk of the market.
And the good news keeps on coming. Thinking about buying a new car? Right now, you pretty much need a PAN for any vehicle that isn't a two-wheeler. The new rule, though, it relaxes this a lot.
The new threshold is going to be 5 lakh rupees. So what that means is for a whole range of really popular cars, you can just skip that PAN quoting step entirely. It just makes the whole buying experience that much smoother.
And finally, there's even some relief for our lifestyle spending. You know, if you're planning a big family wedding or a major event, right now any single hotel or restaurant bill over 50,000 rupees requires your PAN. Well, that limit is also doubling, all the way up to 1 lakh rupees. It's all about less paperwork for those big moments in life.
Okay, but it's not all sunshine and simplified forms. While the government is giving with one hand, it's definitely tightening its grip with the other. The tax department is seriously dialing up the scrutiny on two very specific areas: big cash transactions and insurance policies. So here's the deal with cash. If your total cash deposits or withdrawals for the entire year go over 10 lakh rupees, you'll have to quote your PAN. But here's the really crucial part. If that total crosses 20 lakh rupees, your PAN doesn't just get quoted, it has to be verified. And believe me, that is a whole different ballgame.
Now, what's so important about that word verification? This isn't just you scribbling down a number on a form. It means the system is actively pinging the tax department to confirm your PAN is real and it's linked to you. It's basically a digital flag that tells them, hey, pay a little closer attention to this one. It's a very clear move to track large flows of cash.
Now let's move on to the other area they're focusing on: insurance. And you're going to want to pay close attention here because this is the big one. This change is probably the single most significant shift in the whole proposal, and it's designed to affect pretty much every single one of us. So up until now, you only had to give your PAN to an insurer if your annual premium was more than 50,000 rupees. The new rule, forget that limit. Now you will most likely need a PAN for any kind of account-based relationship with an insurance company. It doesn't matter how small. This basically brings every policyholder in the country into the tax department's reporting net.
So after all that, what does this actually mean for your money, for your strategy? Well, these reforms are a classic two-sided coin. On one side, you get more convenience for your everyday big purchases. But on the other, you get a much more transparent and, frankly, inescapable tax system. The key is really knowing how to play your cards in this new landscape.
And this brings us to what's probably the smartest strategy going forward. Here's a pro tip from the tax experts. Even if your property or car purchase is below the new higher limits, it is often much safer to just quote your PAN anyway. Why? Because it creates a clean, official record that can save you from some major capital gains tax headaches down the line.
So the bottom line is this.
These new rules offer some real convenience, for sure, but that convenience comes with a trade-off: greater visibility into our financial lives. And that really leaves us with one final big question. In a world where real estate prices are just soaring, is doubling the property limit to 20 lakh rupees really a relief, or is it a number that's already out of date? Definitely something to think about.